Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta. You can invest in even the biggest US companies like these with just 100 rupees. The US market offers much better opportunities than the Indian market, because the global business of these major US tech giants isn't just in America, but is spread across the world. Their profit, scale, and dominance are truly many times greater than Indian companies. Just look at Nvidia. Its market cap is $4.26 trillion, which in Indian rupees is about 395 lakh crore rupees. Apple's market cap is $4.12 trillion. Microsoft's is $3.55 trillion, and Google's or Alphabet's is $3.74 trillion. Do you understand what this means? The market cap of the entire Reliance Industries is just 17 lakh crore rupees. This means that Nvidia alone is equivalent to 22 Reliance Industries. Can you imagine? The combined market capitalization of these four US tech giants today is over $16 trillion. And the interesting point is that in the last 10 years, the average annual growth of these companies has been 25 to 30%, while the growth of Indian large cap companies has been limited to around 12 to 15%. Even though the price of a single share in these companies is approximately $200 to $250, which is around 20 to 30,000 rupees, I am still going to tell you about an incredible way through which you can actually become a shareholder in these global giants for as little as 100 rupees. You can become their shareholder even without investing thousands or lakhs of rupees. No US bank account is required. Directly from your mobile app. And yes, there is actually another important factor here that people often ignore. Historically, for the past several decades, the Indian rupee has mostly depreciated against the dollar. This long-term trend gives your US stock returns an extra boost. Now, of course, this isn't really guaranteed, but the past and historical data has shown us that currency movement has generally supported the returns. You can think of it this way. Your investment essentially grows in two different ways. First, from the performance of the US stock. As the company performs well, its stock price will definitely increase. And second, from the dollar getting stronger. Here too, you will get an additional benefit that makes long-term compounding that much more powerful. You can now easily check this with the IND Money's USD to INR return calculator. For example, if you had invested some money in any single US stock, what would its value be today? And basically, including both the capital and currency returns. This video isn't just for information, but it is actually an opportunity window that very few people understand. In today's video, I am going to reveal a total of 3 secrets. Number 1, how you can become a shareholder in the biggest US companies with an investment of just 100 rupees. Number 2, how by carefully investing your capital into the top 10 global AI stocks, you can actually benefit from the massive growth of the AI sector in the future. And most importantly, number 3, how you can actually start to invest in the very top US companies with just 100 rupees. And not just one company, but diversify your investment in 200 or 400 at once. And by this video's end, you'll also know how to invest with just 100 rupees in Apple, Microsoft, Google, Tesla, and Nvidia. I'll explain how you can invest in global businesses like these and how you can invest in US tech giants. I will detail exactly how you can invest in expanding AI companies like Nvidia, Broadcom, and Palantir, and how you can significantly increase your personal wealth through rupee depreciation. So, make sure to watch the video till the end. This could be one of the most insightful videos of your life. Look, the harsh reality is that India's entire stock market is actually very small. The total market cap of the Indian stock market is about $4.7 trillion. This number seems big, doesn't it? But the total market cap of the US stock market is about $135 trillion. This implies the US stock market is almost 28 times larger than the Indian one. In fact, Nvidia's market cap alone is greater than the total market capitalization of the entire Indian stock market. Can you imagine that? Nvidia is such a huge company that it can be compared to the entire Indian stock market. And this isn't just about size, but also about profitability and revenue. The difference between them is even bigger. Apple's annual revenue in FY24 was $391 billion, which is more than 33 lakh crore rupees. And their net profit was $93.7 billion, which is about 8 lakh crore rupees. Now, let's compare this with India's largest company, Reliance. Reliance's annual revenue in FY24 was a little over 10 lakh crore rupees. Its profit was 79,000 crore rupees, meaning Apple's profit is a full 10 times greater than Reliance's total profit. And keep in mind, we are just talking about one company. There are many such companies in the US market. In FY24, Nvidia reported total revenue of $60.9 billion US dollars. That's roughly 5 lakh crore in Indian rupees. Its net profit was $29.76 billion, which is about 2.5 lakh crore rupees. No one else has this level of scale and profitability in the entire global AI hardware category. The entire semiconductor industry is literally revolving around Nvidia at this moment. But here is the real shock. If 10 years ago, you had personally invested just 10,000 rupees in Nvidia, that amount would have easily grown to be worth 22.7 lakh rupees today. Yes, an unreal compounding of over 22,500% in just one decade. This means an investment of just 10,000 rupees would have silently grown to over 23 lakh rupees simply because Nvidia defined the next decade of AI, GPUs, and data center computing. And this is without even considering the dividend income. If you consider dividend income, that would be extra add-on. Within all of India, there currently is not a single publicly listed semiconductor or AI company whose real scale is anywhere near that of Nvidia or Broadcom. Just consider Dixon Technologies, which is India's largest electronic manufacturing services company today. Their annual revenue is just 17,000 crore rupees, while net profit is a mere 500 crore. Did you see the difference? The amount Nvidia earns in 1 year is more than the market cap of the entire Indian electronics industry. That shows the sheer power of investing in US companies, because they are the ones who control the market. This does not mean that Indian companies are bad. No, certainly not. But in terms of sheer scale, global reach, and their sheer profitability, the top US companies are certainly far ahead. And most importantly, the very epicenter of the current ongoing AI revolution is in fact the US, not India. AI is the future, but there isn't a single publicly listed, pure-play AI company in India. According to a report by Goldman Sachs, the AI market by 2032 could reach $1.8 trillion with an annual growth rate of 38%. Yes, this is in fact true. Now think about it. In such a fast-growing industry, there isn't a single listed company in India for us to invest in. That is exactly why the US offers you a broad market along with multiple investment opportunities. According to an in-depth McKinsey analysis, the AI automation could actually add roughly $13 trillion to the global GDP by the year 2030, although the vast majority of this growth will be captured by US-based companies. And that is simply because the top 10 AI companies by market cap are in the US, not India. First on the list is Nvidia. With a market cap of $4.47 trillion, this company's AI chips, data center accelerators, and the global AI infrastructure have become its backbone. At number 2 is Apple, $4.13 trillion, which is rolling out on device AI and Apple Intelligence to the public on a mass scale. At number 3 is Alphabet or Google, $3.87 trillion, which owns powerful AI, platforms like Google AI, Google Cloud, DeepMind, and Gemini. At number 4 is Microsoft, standing at $3.55 trillion, which has partnered with OpenAI and is currently leading in Azure AI, services, and enterprise AI adoption. At number 5 comes Meta at $1.63 trillion. This company is also a well-known leader with its Llama AI models, AI-driven ads, and deep AI integration in both the WhatsApp and Instagram experience. At number 6 is Tesla. It's a $1.50 trillion company which maintains a core focus on fully self-driving AI, autonomous robotics, and real-world AI training. At number 7 is Oracle at $635 billion with its enterprise AI, cloud infrastructure, and AI-optimized databases. At number 8, Palantir, a $447 billion company that is known for building AI-driven decision platforms for the defense, enterprise, and government sectors. And yes, all these companies are not just operating in the US. At number 9 is IBM at $292 billion. And at number 10, Adobe at $145 billion. It is aggressively innovating on next-generation models such as Firefly, AI models, and creative generative AI workflows. There isn't even a single Indian company on this entire list. And basically, the AI work being done in India is mostly service-based. TCS, Infosys, and Wipro do provide AI solutions to their clients, whereas core product development regarding foundational AI models and infrastructure are all in the hands of US companies. If you want real AI exposure, which basically means exposure to chip makers, data center giants, or cloud companies, then US stocks are the only way. And that is the primary reason why most smart investors are currently investing in the US market alongside the Indian market. And you can too, through fractional investing, starting with just 100 rupees with IND money. Traditionally, if you bought just one share of Apple, its price would be $254, which is approximately 21,600 rupees. One Nvidia share is $180, about 15,300 rupees. Microsoft's is $436, which is approximately 37,000 rupees. Just think. That simply paying these massive amounts was mandatory for buying one share. This means if you wanted to assemble a reasonably diversified portfolio of US stocks containing 5 to 10 stocks, you would have certainly needed to invest at least 1.5 to 2 lakh rupees. Plus brokerage charges, forex conversion fees, and the hassle of a US bank account were very tiring. It simply was not accessible for common investors. But now, IND Money has truly made all of this possible. You can start investing in US stocks with just 100 rupees through fractional investing. That's the power of fractional investing. Fractional investing means you can purchase a very small portion or a tiny part of one single share. As an illustration, if one share of Apple actually costs $254, then it means you could actually buy as little as 0.01 of a share by paying just $2.54 to own that portion, which will cost you only 216 rupees. And this concept is already quite popular in the US and Europe. But now this facility is becoming quite popular in India as well. Individuals have recently started fractional investing on digital platforms like IND Money. So what is IND Money? It's actually a SEBI registered platform that provides Indian investors with the facility to invest in US stocks. Through this app, you can invest in more than 9,000 US stocks, which includes not only the US ETFs, but global ETFs with zero account opening charges, the best forex rates, and zero AMC and withdrawal charges. Quick withdrawals straight to your bank account. Here is the step-by-step process. The initial step is to download the IND Money app. It is available on both iOS and Android. The second step is to sign up using your mobile number. Third is completing your KYC by uploading Aadhaar, PAN card with a selfie, which are all verified instantly. Fourth step, go to the US stocks section and search for the stock of your choice. Fifth step involves inputting the total amount you wish to invest, and the application will then immediately calculate and display the corresponding number of fractional stock units that you are able to purchase. Just confirm the transaction and buy. It is really that simple. Personally, I have found this app to be amazing. Look here, you can select any US stock and compare its past performance with its peers. And that's not all, because you can also track just how much interest investors from India have in a particular stock, or see how the general investing activity from India into US stocks is currently going. If you find yourself feeling truly confused about how to pick individual US stocks, you can easily invest in multiple US stocks at once through diversified ETFs. In fact, you can also start an SIP in US ETFs or US stocks, starting with just 500 rupees. Look at the screen here. What you are seeing here is the Vanguard's US Top 500 basket, which is basically an ETF that tracks the US S&P 500 index, which includes America's top 500 companies. Its current market price is around $630, yet you can effectively start investing with just 100 rupees. To get started, you just have to click on the buy button here and then go ahead and enter your investment amount, which can be as low as $1, meaning for less than 100 rupees. You will be invested in the top 500 companies in the US. What's more, if you want, you can also start a regular SIP in it with as low as rupees 500. But wait a minute, what about tax and compliance? Well, don't worry, because IND Money handles everything. See, first of all, under LRS, which is the liberalized remittance scheme, you can remit up to $250,000 per year to the US according to the RBI rules. That amount is almost around 2.5 crore Indian rupees. This effectively means that in Indian rupee terms, you can transfer a total amount of approximately 2.25 crore rupees annually. The taxation part is also simple. If you hold stocks for less than 2 years, it is considered short-term capital gains. Such gains will be taxed according to your individual income tax slab. And if you happen to hold for more than 2 years, then you will have to pay LTCG or long-term capital gains. A tax of 12.5% will be applicable on that, plus surcharge and cess. Just like Indian stocks, you also get dividends on US stocks. Now, a 25% withholding tax is in fact applicable on US dividend income for all our Indian investors. But the very good news is that due to the India-US double taxation avoidance agreement, you are permitted to adjust this particular tax amount against your personal tax liability in India. All of this is what gets reflected in Form 26AS. So you can stay tension-free. Now let us come to one of the most important benefits for every single Indian citizen. No one tells you about this particular benefit, but it is truly the most powerful one. When you choose to invest in US stocks, you are actively investing in these dollar-denominated assets. This effectively means your money gets converted into US dollars and your investment returns also start coming in dollars. Now, let's examine the rupee's track record against the dollar. Let's look at the historical annual average depreciation of the rupee. In 2015, the rupee was at 63.75 rupees per dollar. In 2020, it was 74.18 rupees per dollar. And for 2025, it's 90. From 2020 to 2025, the rupee saw a 17% depreciation. Looking at it over 10 years, there has been a 36% depreciation. This means the average annual depreciation rate has always been between 3 to 3.5% over the last 10 years. But what does this mean for your returns? Let's say you invested 1 lakh rupees in US stocks in 2020. At that time, the dollar rate was 74 rupees. You would have had $1,351. The first scenario, just the stock returns. If the stock gave 12% annual growth, then after 4 years, your $1,351 would become $2,129. And now for scenario 2, stock returns plus the currency benefit. In 2025, when you convert these $2,129 into the Indian rupees, then considering the current conversion dollar rate of about 90 rupees, you will basically get your money converted to around 1,90,000 rupees. Let's look at the calculation. The investment was 1 lakh rupees and the return was approximately 1,90,000 rupees. So your total gain is 90,000 rupees. If you think about in the percentage terms, that is 90%. So this makes the effective CAGR approximately 17%. This means the stock gave only a 12% return, but your effective CAGR increased by an extra 4.6% approximately. This is an implied financial benefit that no one ever highlights. But for all those serious long-term investors, this is clearly a total game changer. According to Bloomberg's analysis, the rupee could go up to 95 to 100 rupees per dollar in the next 10 years. Which can yield an additional 2 to 3% annual benefit for your international US investments. Therefore, if you are genuinely thinking about long-term wealth creation, then US stocks are not just an option, but a smart strategy as well. Because here, besides capital gains from your stocks, you also get the benefit of rupee depreciation, which increases your returns. Now let's look at a practical calculation. Let us suppose that you begin by investing exactly 2,000 rupees per month into US AI stocks. You create a diversified portfolio of Apple, Nvidia, Microsoft, Google, and Amazon. What's the assumption? The average annual return from stocks is 18% CAGR, although the historical average of AI stocks has shown a performance of 20 to 25% over the last decade. We assume 18% to keep data realistic. Including currency depreciation, we add an extra rate of roughly 3% each year. Therefore, the total effective CAGR comes out to approximately 21.5%. This means stock growth and rupee depreciation together noticeably boost long-term returns. Now, if we continue this SIP of 2,000 rupees for 25 years, do you know what the returns will be? Your total investment is 6 lakh rupees. The maturity value will be roughly close to 2 crore 10 lakh rupees. But what if you decide to invest 5,000 rupees per month? Let us take the same assumption of a 21.5% CAGR. Total investment is 15 lakh rupees. The maturity value will be approximately 5 crore 82 lakh rupees. For 30 years, then, the total investment reaches 18 lakh rupees with a maturity value of roughly 16 crore 94 lakh rupees. These numbers seem very large, don't they? But they are realistic. If you invest in the right companies and have patience, then this is possible. The average CAGR of Indian large cap mutual funds over the last 10 years has been only 12 to 13%, which is a bit low compared to the US tech giants. Look, the AI revolution has just begun. The decade from 2025 to 35 will belong to AI. And the companies that are leading this revolution, like Nvidia, Microsoft, Alphabet, and Apple, could see their total valuation grow 3 to 5 times over the next 10 years. But all these companies are in the US, not in India. According to a JP Morgan report, the AI market will be worth $800 billion by 2030, just in the enterprise segment. The consumer AI market will represent another $400 billion in total. This means the future is incredibly bright for all the best AI stocks. But all this growth will be captured by those major US listed corporations. In India, there is currently no direct option to invest in the AI theme, except through US stocks. And most importantly, the depreciation of the rupee will work in your favor. Every year, you will automatically gain an extra 3 to 4%. So, go now, from the link given in the description. Download the IND Money app, complete your KYC, and start investing in companies that you think are right, like Apple, Nvidia, or Microsoft. If you take action today, you will be in a different financial reality after 25 years. And if you choose to procrastinate and simply miss out on this great opportunity, you will regret it in 5 years. When you realize that those US AI stocks have already generated between 3 to 5 times returns. So the choice is yours. If you liked the video, please like it. Share it with your friends who are truly interested in investing. And do subscribe to the channel so you continue getting these valuable wealth building strategies. In the very next video, I will reveal a dividend investing strategy whereby investing 10 lakh rupees, you can generate 50,000 rupees monthly, which means a really strong passive income for you. Don't miss the video. Subscribe to the channel. Jai Hind.